Hi, followed the discussion on understanding market indicators, index and its significance. There are various data sheets, data points are available to understand the market. Among them, index or indices are the most important one and easily understandable the entire market, which is very useful for decision making regarding investment. Normally, stock markets are measured by the indices that are representatives of the stocks. A stock market index is measure of the relative value of group of stocks. The index value depends on the value of the stocks in the group. Sometimes individual stocks may behave differently compared to the index, but there is a direct correlation between the index and the value of the group of stocks. So index is important. Index is producing something. What producing something? It is an information produced from the index says healthiness of the particular stock exchange and the stock which is representing the index. An index is a numerical representation of the value of the group of stocks. Any change in the value of stocks changes the value of index. This index is act as a benchmark value to measure the performance of investments. What are the uses of indices towards everyone? Investor, community, company, government, analyzer, anyone. The index can give a comparison of return on investments in stock markets. The comparison of the performance with an equity fund, the performance of an economy, real-time market sentiment are indicated by indices. That's the most important one. Act as an underlying in index funds, index futures, options in the fields of financial investment and risk management. So index is a numerical representation. Any change in the value of stock in a group, it will be changing the value of the index. The index is named as benchmark index having so much of uses. Exactly what is meant by index? How can a common man can understand? It is nothing but a group of stocks that represent the market or its segments are picked up to create an index. Very simply, we are telling index is nothing but a group of stocks. So what is the group of stocks? Where it is coming? Group of stocks, it's representing any sector. Where it is coming? It is coming from stock exchange. We all know that each and every stock exchange is an independent entity. That entity have the entire right to deal the things. These are all older case. It's a realities also. But now, due to the screen-based trading, there is a only existing stock market in India is BSE and NSE. Due to the screen-based online trading is permitted due to the reason whatever is happening in the Bombay stock market as national stock exchange, it will be followed in the every part of India. So in the Bombay stock market or national stock exchange, based on some criteria, a group of stocks are selected. What is mean by groups of stocks? More than one. That's called group of stocks. They have selected and they have made it as a unit, and that unit is going to be sold by stock exchange. That is for the benefit of stock exchange. Like a company, stock exchange is also earning the income through which. So index is nothing but a group of stocks that represent the market or its segment are picked up to create an index. What is segment? Segment, it is nothing but a classification of industry based on their the attribute. Take the example, steel industry, cement industry, aluminum industry, FMGG product industry, like that. There are so many number of segments are there. So the index may be the market represent or maybe the segment represent. This index can be used for three type of format. One is for financial, another one is commodity, and next one is there the other markets. So what is the financial? The price movement of stocks, bonds, trade bills, and other forms of investments are measured by constructing financial indices. Commodities, all the things which is available in multi-commodity exchange. Any of the commodity, a commodity may be the rice, a commodity may be the paddy, commodity may be the wheat, a commodity may be the cotton. So like that. And more importantly, an index is just a benchmark of a segment of a market as a whole. Exactly, we have to understand that one. Even in the group of stocks, that any one share cannot be exactly represent the index movement, because group stocks among the groups, for example, a BSE 30 number of stocks are there, NSE 50 number of stocks are there, multi-commodity is 40 number of stocks are there. All the 30 will not performing as you like it, that is rise up or rise down. Among the BSE 30 Sensex, 15 companies performing good and moving up, 10 is very less, that is downward trend, another 5 is normal. So what is case? All together it will be averaging. That averaging return is called the index return. So naturally we will not be expecting that one. Whatever the index movement is there, the same level or same movement have to be having in there the particular share. It will not. And move on to there. The next one, investing in indices. Is it good or bad? Yeah, it's best. Comparably, the investor who are not ready to take up the much risk in the more viable and volatile market, it is better to keep the investment in indices. So what is the index? Instead of you are going to buy the shares for a particular company or particular segment, you are going to buy the indices from the particular market, which is called the investing in indices. It is good. It is always return the market return. It is averaging itself. Risk is comparably low. So because of reason, investing is in indices is good. So in this slide, we are discussing about index on and its significance, introduction what is, and what is meant by index, and investing in indices. Thank you.